Hi everyone, it's Josara here, and today we are going to present to you our 20 stock weekly challenge. Before I carry on, let me just introduce myself. I'm Joe. Sarah is my wife. Unfortunately, she cannot be here today. So if you would like to check us out, okay, you can actually go into our Facebook account, Josara, or our YouTube channel, Josara Investology. You can also access the link at the bottom left-hand corner of the screen. Okay, this is our free course where we actually uploaded a lot of free materials and a lot of research on different companies. Okay, so we are husband and wife team, and we believe that together we are better. Of course, together also involves you and me. So the topic that I'm going to talk about today is actually a 2.59% dividend yield. Let's say if you invest in all the opportunities that I'm sharing, all right, and this is very closely related to the S&P 500. You may be asking me, hey, 2.59% is actually quite low. It's nothing really to shout about. I agree with you, but do note that if you invest directly in the S&P 500 now, your dividend yield is only around 1.6 to at most 1.8%. All right, so getting a 2.59% is already a boost. So let us just to set some context. This is the overall chart for the S&P 500. As you can see, throughout the years, mostly it has been going up, and the S&P 500 is actually a fund that actually tracks the performance of the top 500 companies in the US market, and because of this, it has always been used as a benchmark, as an indicator of how the US economy is performing. All right. Like I said, okay, I am not only going to talk to you about one, not two, but actually three opportunities today. Okay, so if you are interested, stay tuned for it. And because our strategy, okay, we are focusing on dividends, so it will allow you to profit regardless of market direction as long as you hold the shares long enough. Okay, maybe before I start today's video, today's sharing, I'll just like to share with you a story of this house. Imagine you have this house right in front of you, okay, and I'm the sales agent. I'm trying to sell you this house. For this story, I'm going to tell you this, all right? For this house, the valuation is only at $2 million, but I'm going to sell it to you at $1.5 million. Don't worry, I'm not a scammer. I'm not out to cheat your money. All right. You can assume that these figures are true for the purpose of this story. All right. The question is, would you buy this house? I guess most of you will say yes. Why? Because you see it as a value entry. You believe that with $1.5 million, you can access a $2 million worth of property. So this is actually a very good deal. And if you decide to buy this house, you are buying it because you see the value, or what we call a value entry. So what has it got to do with our topic today? Okay, so what I did was I went to ETF.com. All right, you can also go there, and I really encourage you to check out this website. It's free. All right, so under this search ETF.com, okay, you can type SPY. All right, and look, there are many different SPY related ETFs that you can go into. Okay, there's SPYG, there's SPYV. All right, and for now, right now, I'm just going to focus on SPYV. What does it mean? It's the SPY. It is from the SPY portfolio or S&P 500 portfolio, but they focus on value companies. Okay, so what do I mean by that? Okay, if you look at the right hand side of the screen, all right, you will know that this SPYV ETF, their top 10 holdings, just take a look. Okay, there's Berkshire Hathaway, there's Bank of America, there's AT&T, ExxonMobil, okay, Johnson & Johnson, JP Morgan, all right, Pfizer. I don't know whether I pronounce this correctly or not. You can even look at the sectors that they are exposed to, all right, with the top sector being financials. All right, so what is the meaning of this value ETF? Basically, they are trying to sieve out the companies with high net value. What do I mean? These are the companies which hold very high value assets like cash, properties, raw materials, commodities. So that's why you can see here, look at the sectors here. They are mostly in the financials, consumer, commodities, energy, technology. Okay, so to access any ETF, actually it is quite important to look at the information on the left hand side of the screen. Okay, you can see all this when you type in SPYV or any ETF ticker symbol, all right, into www.etf.com. The first thing that I look at is actually the expense ratio. What this means is that this is the fee that the fund managers will charge, okay, from anybody who invests in this fund. So because of this, you always want this expense ratio to be as low as possible. So I would say anything below 0.8% is actually quite cheap. You don't have to pay the management so much money just to manage your portfolio, okay, that ETF. All right. Of course, we would need to check out the price to earnings ratio or the PE ratio, price to book, and the distribution yield. So if you are interested in the in the SPY value or SPYV ETF, okay, it is now, I would say, slightly overvalued, so I don't recommend going in now. I will try to look for an ETF of, a PE ratio of around 14 to 15 or even lower than that. All right. So, but even if you don't mind going in now, you can get a dividend yield of 2.23%. All right. So back to our house. So that's all for the value value part of the S&P 500. Okay, the other thing is, okay, let's say I tell you this house again, now my valuation is still $2 million, but I'm going to sell it to you at $3 million. Would you still buy it? Okay, maybe I haven't given you all the information. I'm telling you now, annually you can get back $150,000 in rental. All right, and assuming the tenant would want to stay forever. So yeah, who will do that, right? But never mind, just assume it. Okay, would you buy it? All right, would you buy this even though it is $1 million above the valuation? If you say yes, all right, you are actually entering this house or this property based on dividends, okay, or what we call rental. All right, so there's another ETF here, SPYD. D stands for dividends. This tracks the highest performing dividend companies in the S&P 500. So there is like similar to SPYV, there is another filter. All right, out of the top 500 companies in the S&P 500, they sieve out the best performing dividend companies. So this is actually like somebody is doing another round of check for you, and these are the top companies. So if you look at the holdings, okay, they have companies like AbbVie, they have Iron Mountain, okay, they have a lot more. Most of them said to say, I don't really know these companies, okay. And if you look at the expense ratio again, it is 0.07%, which is pretty cheap, all right. But right now, the price to earnings ratio is actually 37.98. So SPYD is considered quite expensive, quite overvalued. Even then, the dividend yield is 4.43%, which is not too bad. All right. So that's it. That's about it for SPYD dividends. Of course, okay, I have one more as promised. So again, back to this house. This time round, valuation is the same, $2 million, but I'm going to sell it to you for $4 million. You must be thinking to yourself, oh, I'm an idiot to buy this. Oh, don't worry, you're not. Let me give you more information. Let's say if I can guarantee you a growth rate of 25% per annum, would you still buy it? Okay, no right or wrong answer. So if you say yes, I really want to buy this, even though it is 100% above the valuation. Okay, if you decide to say yes and buy it, you are entering this based on the growth entry. Okay, so again, let us look at the holdings in the SPYG. All right, these are the companies that I believe a lot of us are very familiar with. So what is this SPYG? It is actually they actually sieve out all the top performing growth companies in the S&P 500. All right, we have Microsoft, Apple, Amazon, Facebook, okay, Visa, MasterCard, JP Morgan, Nvidia. So I believe these are the companies that a lot of us, we are very familiar with, we are really very exposed to, because most of us would have used one or more of their products every now and then. All right, expense ratio, again, let us look at some numbers. 0.04%, so we know this is very cheap. Price to earnings ratio 29.19, not as cheap as not as expensive as SPYD, okay? But I would say it is still a little bit overvalued, so you may want to wait a bit more, okay, before entering this SPYG. Distribution yield or the dividend yield is 1.26%. So you may ask, what is the difference between distribution and dividend yield? A dividend yield is a term used by if it's just one company. If it's one or more companies coming together, they call it a distribution yield. Actually, in terms of investor, they almost mean the same thing. You will still be getting that amount of money every quarter or every yearly based on how often they decide to give out the payout. All right. So a quick comparison, okay? If I have listed down all the current share prices as of yesterday, Friday, all right. If you decide to invest in all V, D, and G, you will pay a total of $120.21. All right. Compare this to the SPY, which was at $336.95. You are actually paying almost one third of it. All right. And like I said, SPY, the dividend yield is only 1.67%. Even if you invest in everything, SPYV, SPYD, and SPYG right now, your payout, your dividend yield will work out to around 2.59%. Okay, so the bad thing for these three ETFs is that they are not optionable, so you don't have a choice. You only have to buy and hold the shares. But there's another silver lining, because the way I see it, for some investors, you are not pressurized to actually buy 100 shares at a go so that you can do options. So you can go in each time. You can do dollar cost averaging using a fixed amount of money. You can buy maybe 10 shares every month or 15. All right. So you will still be guaranteed the dividend. And to be honest, is it so easy for these ETFs to actually go to zero or go bust? I would say no. All right. So that's it for today's episode. So let us know whether you will actually go into any one of these SPYD, SPYV, and SPYG. All right. Till the next time we meet again. Okay. Bye bye.